New accounting standards mean coding lease costs to the profit and loss may no longer be acceptable. That's under FRS 102, being in line with IFRS 16. The lease liability and right of use assets are now recognised on the balance sheet. There are exceptions for leases that are less than 12 months or of low value. Always check the accounting standards that are followed with your accountant. nettTracker lease tools are currently designed for finance lease accounting. Operating leases are usually shorter than finance leases, and the ownership responsibilities, like maintenance, remain with the lessor. FRS 102 eliminates the distinction between finance and operating leases, so you could use nettTracker for both. Always check with your accountant if you are unsure which accounting standards you should follow. Before we go into nettTracker, let's work through the following scenario. A business is leasing machinery that has a market value of £50,000. The business paid a £5,000 deposit, which is non-refundable against the lease. Legal and professional fees were incurred at a cost of £1,000. Cashback commission incentives of £500 were received as part of the agreement. At the end of the lease, it is expected the machinery will be worth £10,000 when it is handed back to the lease company. We have a date of the lease, and payments of £1,300 are due to be made monthly in advance for 36 months. Now that we are aware of the core details, let's enter that information into nettTracker. Before you create a lease, you must have an asset group in place. This is created in the exact same way that you would for your general fixed assets. You will receive a warning if you don't have any asset groups set up. From the left-hand menu, below Loans, we select the option to create a new lease. We name the lease and can add a description and a reference, but it is not mandatory. We enter the current market value of the asset being leased. Within the prepayment amount, we enter the deposit that was paid. We can also add details of further costs incurred, incentives received, and the expected value of the asset at the end of the lease. In the repayment amount, we enter the value that will be paid either monthly, annually, or quarterly, and then the total number of payments. We then select the payment interval and timing. All of the entries made in the details section will affect the interest rate calculated, the lease liability, and the value of the right of use asset. Within the dates area, we specify the date of the lease, when the first payment will be made, and the date from which nettTracker will start posting journals. This is very useful for leases that commenced in previous financial years and will avoid back posting into closed periods. Because the lease will be connected to a right of use asset, we select the fixed asset group the asset will belong to, which is already mapped for the depreciation postings. In the posting account section, we select the profit and loss account to be used for the interest, and the balance sheet account for the lease, which can either be an existing account or nettTracker will create new accounts for you. If required, you can also select additional tracking categories depending on your chosen accounting software settings. We can then select to save. nettTracker will now show the following. Within the statement area of loans, we can see the lease and the implicit rate calculated and used for the lease, the projected interest calculations and payments for the lease, a new asset created within the asset register that will depreciate in line with the number of lease payments. After selecting to process up to the last period end date, depending on the nettTracker processing start date selected when the lease was created, nettTracker will post all of the required accounting journal entries for the interest charged on the lease, the depreciation of the right of use asset, and also a journal reflecting the asset value and lease liability. To ensure that the lease liability in the balance sheet agrees to the statement, the deposit paid, professional fees, and incentives should all be recorded to the lease account. Each lease payment should be recorded against the same lease balance sheet account to reduce the liability owed each month.